My guest today is going to be Chris Barbin, CEO of Tercera. We're going to talk about not the first wave of cloud, not the second wave of cloud, but the third wave of cloud and what that means to professional services. Welcome to another episode of Talking Sense. This season we are back together, so we're not on a Zoom. My guest and I, Chris Barbin, we are together, and I'm really excited about this guest. It's taken me 7 seasons to get the one and only Chris Barbin in the flesh on Talking Sense, and we are going to talk about not the first wave of the cloud, not the second wave of the cloud, but the third wave of the cloud. So tell us a little bit about you and Tercera.
Yeah, well, first of all, it's great to be here, and it's great to be here in person. I am definitely sick and tired of the Zoom thing, and so physical presence wins for sure, and it's an honor to be here. So, and I don't think it's up to me or it's not been me that's been the 7-year gap or whatever you described.
7 seasons.
7 season gap. But it's a pleasure and honor to be here. So Tercera, we are a investment firm, kind of growth equity. And we are investing in professional services businesses, which is pretty unique. Lots of venture and growth equity don't like services, don't like people. They like ones and zeros in software. We love people. We think that people don't suck. And so, we are building off of the experiences that we had at Aperio and different advisory and consulting that I've done over the years to consulting firms, and helping capitalize on what we are describing as the third wave of the cloud, which is the next 10 to 15 years. We think there's probably somewhere between 30 and 40 software companies that will shape cloud, and those ecosystems have not developed yet, and we want to help work with those software companies and those professional services firms to capitalize on that journey over the next 10 to 20 years.
So I love that. I love that you are on the show. You've got quite a rap sheet. CEO and founder of Tercera, growth equity firm focused on professional services. Also former chief culture officer at Wipro. So we're going to talk a little bit about what that means, because you like people. You think people don't suck. So and that's important. Also founder and CEO of Aperio, which was one of the first cloud-based professional services firms, and successfully grew. And then you became a restaurant owner. So all of these things we're going to cover in the episode. A lot of ground. So first and foremost, you talked a little bit about Tercera and how it's unique. What I always love having private equity folks on the show, because as a practitioner, we get to see the company that we're at and maybe the company that we were at before. And so maybe we have experience from 3 or 4 companies, right? But you, in your role, you probably are tracking 10,000 firms, maybe looked at a couple hundred.
Yep.
And so you start to see patterns.
Right.
And one of the things that we want to talk about in this season on Talking Sense is non-tech go-to-market, and some specifics around that. So what are you seeing out there when you look at these hundreds of firms and their go-to-market? What's working?
Yeah, I guess maybe I'll start by rewinding a little bit, because I respect what you all are doing, and respect operators first and foremost. And it was actually a pretty big career decision to make the leap into venture and private equity. In that 30 years I've been an operator, and small, medium, and large companies, starting a number of them, and to in some ways go to the dark side.
It is the dark side.
Was a big decision, and one of the things that was important to us as a firm was to make sure that we kept the operator at heart. We kept that the firm itself that we're partnering with, that we're investing in, is a huge part of the journey. The financiers, provide. It's kind of like bumper buddies in a bowling alley. You don't want to be the bowler. You want to provide some guardrails here and there. And so, we tried to build a firm, and we're building a firm that's capital, connections, and counsel. and not just capital. Capital, frankly, I think is the easy part. And I had raised a lot of money at Aperio and helped other companies raise money, but providing counsel and connections is the hard part. And I'd say that, to your direct question, that is one of the things that I've seen as a pattern across we mapped 10,000 firms, we've talked to 300 firms so far, we're looking at 30 some odd ecosystems. One of the things that people want the most is just pragmatic support, counsel, and connections. The capital is flooding into the market, even in services now, but there really is a big need for firms that want to talk to the right people at the right time and get the right advice. And frankly, in services, there hasn't been a firm that's been doing that, specifically focused on that. A lot of the advice that's been coming in has been software-centric advice, and that's different than services. And so I'd say that's one, thing that we've seen as a pattern. The other big pattern is around support on go-to-market. And right up your alley. Services go-to-market can be very, very varied. Hunting versus farming,
Yep.
U.S. versus international, compensation structures, and so when companies go from 10 to 20 million-ish to 100 million, there's a lot of decisions that have to get made. And I'd say a lot of the pragmatic advice these firms are looking for is how to navigate that transition.
Yeah, because I think in the early days at a services firm, you can apply to some degree a SaaS-based marketing and selling motion to kind of land accounts, right?
Yep.
But as your company matures, and we found this, it's just too expensive.
That's right. It is.
Right?
Yep.
It's a different it's a different margin profile.
Yeah. I mean, services companies' cost of sales and marketing at scale can sometimes will only be 2-3% of revenue. At Aperio, we were hovering in the 20% mark because we were trying to gain and drive and gather market share and grow like crazy. But as you scale, you need to compress that and drive a level of efficiency through your sales and marketing efforts, which is a really important transition of a company going from what we would consider kind of plateau 1 of growth to plateau 2.
So what are those kind of big inflection points that you see in terms of bookings?
Yeah, I mean, so kind of this.
Or I guess it would be billings.
Yeah, bookings are bill. I mean, services. I think there's one part of the journey that's 0 to 10 million, and then there's kind of 10 to 50, 50 to 100, and then 100 plus. And there are different challenges and opportunities as you go through each of those tiers. Again, the go-to-market motion is one of them. Other inflection points are around your decision to verticalize, your decision to go global, but. Finding talent that is, existing skill sets versus growing talent, I'd say is one of those other main areas that we spend a lot of time on. Growing talent from the university system all the way up through and baking that into your culture.
That's a skill set.
That's a skill set in of itself. Creating your own university model in many ways, recruiting and onboarding and making them efficient is frankly a lot more powerful, especially for a services firm, than poaching talent that exists in other firms already. You got to do a little bit of both, but the scaling your university, your own university, is a real big part of that kind of getting through the $100 million mark.
So one of the things that you talked about was these kind of critical software companies.
Yep.
And I think that what was so interesting about our run at Aperio and what SalesForce did is they created an ecosystem around them, almost an ecosystem so they couldn't fail.
Right.
Like we didn't want it. Our whole business depended on that.
Yeah.
So I guess talk a little bit about, for a services company, the importance of being part of an ecosystem.
Yep.
And kind of the multiplier effect that gives, and then advice for software companies trying to build ecosystems with service companies.
Yeah, I mean, a few stats. I mean, when we started working with SalesForce, there were dozens of partners. Now there are over 1,700 consulting partners that support SalesForce, 15 plus years later. When you count software partners that they have, it's thousands more, but 1,700 services partners alone. They're one of the larger ecosystems. You could look at a company like ServiceNow. I think they have 600 to 700. But software companies that are going to scale to tens of billions, not billions, but tens of billions, need hundreds, if not thousands, of partners. And being very conscious of how to go build that ecosystem, having the support infrastructure, the resources, and having that channel-based mindset that the growth can be driven through partners, enabling partners, is a big part of the software side. On the services side, the consulting side, if you will, I always like to think about guiding companies to treat your partner like your biggest customer, your best customer, not as a I got to do it anyway, or let's partner. Like, no, they're a huge customer. Treat them that way. White glove treatment. When they say jump, it's jump 3 times higher. Because sometimes the mentality of partnering can water down over time. You take them for granted. You can never take your channel partner for granted. They are more important than your biggest customer.
One of the things I thought was interesting, and I've been working with some service-based companies, is the way that we designed our territories at Aperio. So I think this is a good example of treating your channel partner like a customer. So our territories were AEs. At SalesForce, or AEs at Workday, because they were the biggest customer. Another thing I think was really interesting was the FUD book. Maybe just tell the listeners about the FUD book. I think that's another good example of just something early days that showed our commitment to the ecosystem.
Yeah, I mean the book that we created, kind of this FUD book. We called it a variety of different things over the years, but it was a book of incredible testimonials that we built up, and that was really differentiating about how we worked with our customers. But we used that with the AEs, with the partner, to prove that we weren't just about when are you going to send me the next lead?
Right.
How much revenue?
What are you working on?
Yeah. What are you working on? Because we want our next deal. We're like, this is the value we're delivering to our customers, and that helped them. It was an asset for them to bring to their customers. So we liked to almost become a Uber SE for our channel partner. And to your point, SalesForce wasn't the channel in the end. It was the rep in Minnesota who covered these 10 enterprise accounts. That becomes a little mini channel. And we kind of report back on that, the effectiveness of that mini channel in Minnesota in many ways. But the FUD book itself became an asset that we could carry around, drop on a table, look at all this great work we did and all the value we're providing for our customers.
And it made a big thud.
It did. Boom.
Well, I love your point about it being a ground game, because I was working with an AE, and when I was an AE, and he said to me, Latané, partnerships don't create deals, deals create partnerships. And that was just something that really stuck to me. And so I think that alignment is absolutely critical. Let's talk about the flip side of that. What are some things that you're seeing software companies do? Because you're now tracking, you said 40-some ecosystems that are creating great ecosystems.
Yeah, I mean, so our first couple of investment areas with Tercera, one was in the Okta space, and our second one was in the Twilio space. Those are great examples of, ISVs that are going from kind of billion to 10, are moving from medium enterprise to large enterprise. Interestingly, they're all running a similar playbook where they have venture funds. They're investing in other software companies. They're investing in services companies. But they're also investing in building their, I'd say, channel infrastructure. The teams of people that can kind of support software companies and services companies to scale them. If you don't have that support on the other side, it's really hard to run the ground game. And so kind of investing in certification and training programs, and just like, he used to do an amazing job with our certifying on our pitch, certifying partners on how they can sell Okta, they can sell Twilio, they can sell the value prop of those ecosystems and others. And so I think it's, there's always we have a venture fund, because a lot of these software companies have a tremendous amount of cash right now, but it's their own internal resources, processes, policies, certification programs that help that broader ecosystem scale, which in the end pays back, because those ecosystem companies drive demand for those software companies.
It's the ultimate virtuous cycle.
It is the virtuous cycle. You know, I was wondering when we were going to get to virtuous cycle in this conversation.
We'll get there in a minute. Before
The gifts that keep on giving.
Yes. Before we get there, I want to talk. I mean, I think one of the things that's really important in a service-based go-to-market is brand. Mm-hmm. And often brand, especially with investment type of people, I'm grossly overgeneralizing. But a lot of times investors think that, marketing is like a machine. I'm going to give it 20 cents and I want to see this come out of it. Yeah. And brand is probably the hardest thing to have that type of quote unquote return. So tell me your philosophy on brand building and some of the importance of it.
Yeah, I'll take a consulting or services-centric view of the answer. I mean, I think that brand building is actually more important for your talent and your team than your external customer, because as a services company, your product are your people, mm-hmm. And so if you can build an employment brand that is very powerful, where people want to work there, where you don't have to pull on the recruiting. They want to run. Like, I've heard so many great things about that company. Mm-hmm. And it's not just, let's spend more money on Glassdoor. There's a lot more you can do to build your employment brand. Whether that's being out in the field, working on philanthropic initiatives, the ground game of your communities, especially now where I think kind of micro talent, like there's going to be talent pools that'll be more micro, not 25,000 people in Bangalore.
Right.
So building your own employment, even investing in your internal comms. As you scale, the message you send to your team meetings every week, and the content that you share and the professionalism of that binds people together. And so I like to talk about, for services companies, building your employment brand first, which then bleeds out to your brand for your customers. And the customers, I remember our customer advisory board, and I talk about our customer advisory board to have others think about that. Our CAB wanted to join us because they wow, we want to learn from how you've built this team. Mm-hmm. And then you just kind of create this momentum with your customers. So I think investing in brand is two parts. It's your own employment brand, but it's also the brand that you have to your customer. And I think oftentimes companies think about, how do we look to the customer, not about looking internal first.
And that's where it has to start.
I think especially for services companies.
And so would you say then, as a marketing leader at a services company, that is it the CMO to CHRO relationship? Or maybe, how
I'd say it's a trio between the CEO, CMO, and CHRO. I think, companies that tell their CHRO to go build culture, that's pretty short-sighted. Yeah, you can't outsource your culture to your head of HR. There is definitely an intersection. To me, it's a bit of a Venn diagram between those three, where you're kind of always working together to make sure that the brand and the culture is being talked about, driven, and lived. You have to have this, values. You have to live those values to make decisions based on those values. But it's not. Again, I think the learning that I've seen is that making sure that there's calories spent internally building your brand and your culture, not just what it looks like externally, is important, and an important role for the CMO. So
you actually did that full time. You were a chief culture officer.
Yes, I was.
What were some of the learnings from being a chief culture officer?
Yeah, so the short history, we got acquired in 2016, late 2016. 17 and 8, basically 2017, I helped integrate the company into Wipro. But then in 2018, transitioned into a role of global culture officer for Wipro. And, talk about a daunting task. You're in a 1,500 person company, now you're in a 180,000 person company, and the CEO says, all right, help us with culture. That needle doesn't move overnight.
No, it doesn't.
70-year-old company that's in 40 countries. And so, the way we attacked that was we tried to break it down into what are some small seeds we can plant where we can show measurable impact. in a period of time and then learn from those. So we actually identified, we got a lot of input. We identified about 40 different initiatives that we could tackle. We narrowed that down to about a half a dozen initiatives. And then we drove kind of in subsets of the team, of the company, those initiatives. And so one example, because I think culture is not one thing, it's a lot of little things.
It's a lot of little things, yes.
And they add up to building a great culture. And one little thing was, it used to drive me crazy at Wipro where we would jump on conference calls, not Zooms. Back in the day, there were calls. And there would be 40 to 50 people on them. And these were too long, too many people, not productive, not organized. And so we initiated back in 2018, Faces Matter was the initiative. Shrink down the number of people.
If it can't fit on the screen, too many people.
Too many people. Shrink down the number, shrink down the size of the call. So instead of being an hour, make it 30 minutes. Actually see people's faces. And so we ran some just basically meeting hygiene to move from conference calling with 50 people to 6 to 8 people on videos. And that was before the COVID thing.
Right.
And that was hugely impactful. Like people could see each other for the first time. They were focusing their time. You get time back as well. And so that was one small thing. But again, we did this over the course of a year and then planted seeds. And the chairman of Wipro now has still taken a lot of those things and has taken them forward now, 2 years later. So it was fun, very fun to work on that.
I mean, one of the big things that you taught me was you should run an internal meeting like an external meeting.
Yeah.
So any of our offsites or, sales kickoffs or whatever, it's like, and I think this is true for all companies, but if you think in the context of ProServe, where everybody who's there and every hour they're there, that's your product.
Yep.
So
that's right.
There's a real cost to that meeting.
Yeah.
And that really helped a switch flip for me. Like there's the real cost of this meeting, but then there's everyone's time.
That's right.
And this is an expensive meeting. It better be good.
Yeah. Yeah, you have 10 people in a meeting that generally bill at $250 an hour. It's a $25,000 meeting if it's a wasted hour. Like in one shot, like very quantifiable services.
Yeah.
And so you better not show up late. You better have an objective. You better have deliverables that come out of it, because that's how clients think. And that's how you build, and that's how you make money. So if you don't do that internally, it's pretty hypocritical. What
services firms out there are just absolutely crushing it from a go-to-market perspective that you guys are working with or tracking? Or?
I mean, interestingly, the valuation of services companies has shifted tremendously in the last 15 years. When we decided to raise money in 2007, 2008, services company were valued at kind of 1 to 2 times revenue. Like very far off.
If you were lucky.
If you were lucky, you're right. Now you're seeing valuations that are, for decent companies that are 2, 3, 4 times. But there are, interestingly, in the last couple of years, there are firms that are trading in the public markets at 7 to 12 times revenue. And that's part of our theory at Tercera, is that valuations will, because the war for talent is so tough right now, valuations will continue to trend up and to the right, like software trends have, valuations have. The companies I love, Globant, EPAM, Endava, these are digital engineering services firms that are publicly traded. Global Logic just got acquired, actually, is another one. Publicly traded, 10,000 to 20,000 people, great cultures, very agile, doing innovative things with AI and automation to drive, like true AI and automation, not just like on marketing slides. Type ahead, like as you're a developer, typing like we have autocorrect, but that's happening in code.
Think about the multiplier of that.
And they are measuring the impact, where the individual consultants are seeing 20, 30, 40% improvement in productivity, which you can then track in billings. So I think those 4 companies are, I think, some of the shining lights, if you will, of the industry. I mean, there are other companies that I have a lot of respect. I mean, I continue to respect Accenture. I think they do an incredible job at such a crazy big scale. I love Slalom. Slalom. They have really cool cultures that are set up in a franchise model. So their organizational model at $2+ billion is pretty cool. So there's a lot to learn from in the space.
What about the notion of being tech and software?
Yeah. Yeah.
Can you do both?
Yeah. I mean, the short answer is I don't think so.
It's an age-old question.
I don't think you can.
don't think so?
I think you can spawn off, smaller products. You can have tech enablement in your services. I think it's very different DNA to do both. At real scale, you can maybe cleave off a software division, if you will. But I never recommend services companies sub-scale, sub 100 million.
Trying to also...
We have a product that's going to solve world hunger. We hear it every single time. This IP is incredible. Yes, I'm sure it's great, but does it drive your ultimate vision of building a tremendous services company, adding real value to your customers? And so I think it's very, very hard. I think it's a very different go-to-market motions, different investment profile, different types of investors. Mm-hmm. Lots of downside, I think, to trying to be both subscale.
What about as a software firm having professional services?
Yeah, I think every software company, should have somewhere between kind of 3, 5, 10% of their revenue that is services. Call it customer success. Call it enablement of your channel, of your ecosystem. But there's always a level of just solution selling where I think a software company has to have that in-house. But those people being focused on the channel partners as well. How do you work together, side by side, arm in arm?
Right. The software company needs to know how to successfully deploy a customer so they can then teach the ecosystem. It's sort of like a teaching ground too.
Yeah, especially for new features. You're evolving from an app to a platform, and we have new things we got to do. Like to throw that right into the ecosystem has a lot of risk. Doing that internally first, rinse, repeat, learn, roll out. That's a great role for a software company services team.
I want to transition to talk a little bit more about you.
Oh boy.
Yes, let's talk about you. So what was your favorite job, other than right now,
Yep.
ever? What's been your favorite job?
Of course it was
And
working
why?
with you, Latané.
Of course.
I would say I was an apprentice for my dad every summer when he was a carpenter. And I would say, for me, that was, it was super hard work. He used to call me his gopher. Go for this, go for that, go for this, go for that. But I learned a lot about just hard work, I'll call it work ethic, discipline. And there would be days where it's just like, go dig post holes. Then go do it again and again and again. But, also learned a lot about math and geometry and just versatile and diverse skills. And I think just generally speaking, frankly, trades are so undervalued, especially here in the United States right now. I wish more people would consider the trades than, let's everyone run to STEM. But there's a stigma for some reason, but I think there's such a shortage of trades in the US. So anyway, I loved doing that, and I hope to kind of get back to more of that as my white collar hands get too soft.
It does feel so accomplishing. I love to work in the yard because
yes.
There was a lot of weeds and now there's no weeds.
And you can see the results in real time.
Right there.
That's right. So I loved that work.
Awesome. All right. And then, no one gets off of Talking Sense without our last question, which was, and I'm a big believer that we learn more from our mistakes than our successes. So colossal F up, biggest F up.
Yeah, so colossal F up, and a little bit of this story. I'll try to make it brief. When we sold the company, my wife and I, Lori, who you know well, we wanted to work on something together, a project together, a business together. And mess up number one was we decided to do two at once. So we launched a tequila business, tequila platforms, siptequila.com and Combaveda, and we opened a restaurant. Built it from scratch on the waterfront in Wisconsin. And I will say the restaurant industry is the most challenging, difficult, fraught with all kinds of downside, low margin, low reward. Just get beat up every day by customers that are buying a burger. It was really hard, and honestly, between Lori and I thought we were going to get divorced over it. We were doing this together for passion, and it was brutal. It was brutal, and we actually sold it off to a proper restaurateur, thankfully. But I thought we could apply a lot of traits, skills, culture building, team building that we learned in enterprise software and services to small town restaurant. Not so much.
Not so much.
Not so much. Super hard, bad mistake, lots of levels, but you live and learn.
You live and learn. You live and learn.
Any like successful entrepreneur who maybe has a good outcome, don't open a restaurant.
Don't open a restaurant.
You know what? I am a great restaurant visitor. I suck at operating them.
But I will say that Sip Tequila, your tequila brand, is doing quite well. Just for listeners, this episode is brought to you by Sip Tequila.
Right. Yes, that business is awesome. We just got back from Guadalajara, releasing the Reposado. Yeah, we have done really, really well. I mean, direct-to-consumer tequila.
And we've done a bunch of tequila tastings with our Sixth Sense customers.
You guys have been an awesome customer.
We've sent a lot of people gifts of tequila.
Yes.
So for those listening, if you're a Sixth Sense customer and you want to do a tasting with us, let us know.
You're like a channel to us.
We try. I hope my CFO's not
Very
listening.
much appreciate that.
Well, Chris, it's been a long time coming to have you on.
It's been great being here.
I've learned a ton getting to work with you. I know that we've shared a ton over this episode, and it's awesome to see your passion for services.
Thank you.
Awesome to see you back in the game.
It's awesome to be here with you, and
Yeah.
congrats on all your success. Business is awesome.
All right.
Love it.
That is a wrap. Chris Barbin, CEO of Tercera.